Howdy, Wall Street Willie. What should I keep in mind when investing in stocks? It's important to understand that while stocks have a huge profit potential, investing in stocks does come with a risk of losing money. This is why it's crucial to do thorough research before investing in any stock, and be prepared for ups and downs in the near term, which is called volatility. It's also important to have diversification. Don't invest all your money into just a handful of stocks. Instead, spread your investments across different companies and sectors, and if possible, even geographies, to minimize the risk of losing money. For instance, in one year, the technology sector might experience record profits, while the automobile sector might be experiencing a loss, but this could completely change the next year. Diversification allows you to enjoy the gains while minimizing any losses. Despite short-term fluctuations, stock investments in good companies tend to do well over time, so have patience, be disciplined, and invest for the long term. Don't be impulsive, react emotionally to market volatility, or get swayed by tips, hot stocks, meme stocks, etc. Also, as a common stockholder, you need to be prepared that in case of the company's bankruptcy, you may not get anything, since you will be the last in line as the assets are liquidated. How can I invest in stocks? You can invest in a company in the primary market when it first goes public through an IPO or initial public offering. After this, it is available for trading on a stock exchange like the NYSE or NASDAQ, which is called the secondary market. There are two main ways to invest in stocks in the secondary market. The first is direct ownership, where you buy stock of an individual company through your brokerage account. Most online brokers no longer charge fees for buying and selling stocks. While this makes direct ownership easier, it'll need a lot of money and involve a lot of research if you want to achieve the necessary diversification. An easier approach, especially for beginners but really for everyone, is to invest through mutual funds or exchange-traded funds. What makes it even more effective is investing in a fund that tracks a broad-based index like the S&P 500. This way, you get instant diversification of investing in 500 different companies at a fraction of the cost and without any hassle of researching, tracking, buying, and selling individual stocks. If you want to start investing in stocks now, watch the video on your screen. Thank you very much, Wall Street Willie. You're welcome, Super Cooper. Remember, finance is your friend.